Hey guys, welcome to the channel, The Noble Trading. I'm a trader and trainer, Mr. Goel over here. So today we are going to understand a very important topic in the Forex trading, or you can use this kind of concept in any kind of trading, is the importance of a daily high and low in the market. Let me here write down the whole topic. So basically, when we talk about the previous day high or low, you have to understand, guys, that this is one of the most important liquidity zone of all levels. So you might have heard a lot of concepts about the liquidity trading in the past videos, and you will be getting a lot of videos in the future as well. So do not forget to subscribe to the channel. So in the whole concept of the liquidity trading in the market, so when we are using the concepts of liquidity and we are trying to understand the levels of the liquidity at various intraday levels, the most important level of any chart, let it be forex currency or the cryptocurrency or the any index chart, the most important is the previous day high or a low, because these two levels acts as the one of the best liquidity levels for the intraday trading. I'm not talking about the you can say swing trading, guys. I'm only talking about the intraday trading and the scalping, guys. Okay, so when we are talking about the intraday trading or the scalping, the previous day high and the previous day low acts as one of the most important levels in the liquidity trading itself. And today I'm going to show a few examples of how you're going to use this topic. Basically, first of all, you should understand like and how we are going to use this topic as well. So for that, I have opened up the GBP chart on a 5-minute time frame, and you can use this or utilize this concept, or you can watch this concept or backtest this concept before using in any of the charts. Okay, so even looking from the current day itself, what we are going to do, we are going to do the backtesting for the basically 10 to 15 days. Okay, so what's the concept is, basically the concept is simple, that if this is something like this is the whole day like this, the previous day I'm talking about, this highest level we considered as what, the previous day high. Okay, so I'll be marking it as PDH. Okay, and the lowest point from here, from where the market started, and the lowest point that the market traded for the whole day will be regarded as the previous day low in the market. So this is the previous day high, and this is the previous day low in the market. Now, what are we expecting on the next day? Let's say this starts the next day over here, and the next day has started from something like this, and you have put up a session break. So from here, what we are expecting is, if the market creates swings, okay, if the market creates swings and breaches any level in the market or the previous day low or the previous day high, 70% of the times or even 80% of the times, you will see that the market will try to give us a good reversal momentum at that point when the market has just taken out the previous day low. And the vice versa can also happen. Let's say the price creates something like this, and then breaks the previous day high, and then finally you will see a small pullback towards the downside, or you can take a small reversal entry towards the downside with a risk reward of minimum 1:3. I'm not talking about 1:1 or 1:2, guys. I'm talking about a risk reward entry of 1:3, which will be highly important. Okay, which will be highly important when you are trading in the intraday markets and you're trying to scalp some of the pips in the market. So this is one of the strategies, which is one of the basic and very useful strategy with a very high winning ratio when we are trying to take a reversal trade in the market after taking out the previous day high or previous day low of the market. Okay, so now let's go on to the real markets and let's see if this really works or not. So looking at the current day, starting from the current day, we will be trying to backtest at least 10 to 15 days on the previous days. Okay, so now over here, if you will look, if this is the day where you're trading on, okay, this is the present day. I'm marking it as a present day. So this is your present day when you're going to trade in the market. Okay, so what we need to do, we need to start marking the levels of the previous day high and the previous day low. So this blue lines is the radius of the previous day. So if you will look, the previous day started from this level, so this will be regarded, this level will be regarded as what, the previous day low. When this day started at this time period, and the price actually went above on the whole day and then made a lot of swings, the price created two utmost important liquidity levels, which is known as the previous day high and the previous day low. So the lowest point of the day which the price is touched will be regarded as previous day low, and the highest point which the price is touched will be regarded as previous day high in the market. Okay, now if you will look properly, after taking out the previous day high, you cannot just expect to directly sell down the market. Okay, you cannot just do that. You need to have a very good entry point. Now if you will look over here, the price is taken on the previous day high. Okay, after taking out the previous day high, what are we looking to catch is this. Okay, we are looking to catch is this move, which is highly important. And you can see, if we try to trade from a very good point, or if we try to trade at a particular level, then you will be able to take a good momentum towards an downside. Now, while taking the entries, many people are confused. Even in the intraday, they are very confused how to take the entries and how not to take the entries. And I'll be giving you a lot of full videos making on these concepts, in the future, in the coming days. So do not forget to subscribe to the channel so that you can be updated about these videos. Okay, guys. So what is happening over here is, once the price takes out the previous day high in the market, that means all of the sellers of the previous day, all of the sellers of the previous day, those have put the stop losses above, the price is twitching all their stop losses, or the price is picking up on their stop losses of the sellers. Okay, now after taking out the stop loss of the sellers, there are many other foolish buyers, there are many other foolish traders, or you can say there are very other ignorant traders in the market, those who are also opening up the entries or opening up the buy entries on the above side. Okay, on the above side like this, they are putting the stop losses on the nearest support or the resistance like this. They are putting the stop losses over here, they're putting the stop losses over here, over here, over here, and over here. And if you will see, after taking out the previous day high, price did not hesitate to go fully downside and take out the current day or the intraday low. Okay, so this is the current day from the way the market started. This was a low created by the market itself. It didn't even hesitate to take out this low as well. That means all of the buyers, even if they have put the most conservative stop losses below these supports, they are all into the negative. And once the price is taken out this, the price has started moving above as well. So this will be the next concept in the market, when we will take the another important level of the intraday high and the intraday low of that current day in the market. Right now, we are looking forward, we are studying the previous day in the market, but after some time, we are also going to study the most important intraday levels of the current day. Like over here, this is the current day intraday low, and this is the current intraday high, which both have been taken out. And after that as well, we can expect some kind of reversal nature in the market. Okay, so this is how we are identifying the liquidity levels, first of all, which are the major important liquidity levels in the market, and how do you need to start trading on them. And most importantly, how you are looking in the market, so the perspective that you need to create in the market to take out other people's stop losses and not to give out your own. That should be your main purpose in the market. Now over here, what I am trying to tell you is, above the previous day highs, there are many ignorant buyers, those who are buying on a continuous basis and then trying to target on the above side based on the Fibonacci levels or the extended Fibonacci levels. But what we need to understand and how we need to trade in these markets is very simple. If I'm going to tell you something very important, you need to understand very clearly how we need to take the entry. Let the market create higher highs. If the market is creating higher highs, that means the market is creating a push, or you can say the market is repeating, or the market is still in the upside momentum only. Okay, so let the market fully create the concept of the higher highs and higher lows, and then once the price finally breaks the major low, okay, once the price finally breaks the major low, the previous low of the market, you need to start selling from this level, putting your stop loss on the previous resistance in the market. As you can see, once the price broke this major support, the previous resistance was over here and not over here. So you need to check out what you need to put your stop loss on the latest resistance level, proper resistance level, from where you will be expecting at least a risk reward of 1:3. As I told you in the beginning of the video, that you need to take a risk reward of 1:3 in the market, minimum 1:3. No doubt we will get much better than that sometimes, and we will get much sometimes the stop loss also will hit. But as I told you, the strategy is at least 80% accurate, and you will be getting at least a risk reward of 1:3 with a handful of pips as well. Like over here, we have got around 100 pips in the market. No doubt your stop loss was a little bit huge. You have a stop loss of 34 pips, but in total, we have got 105 pips in the market, or 105 pips in the market. That means it's a handsome ratio in the market. Okay, now if you have understood the concept, very well then. If you're not, please do ask your questions in the comment box. Now let's do some backtesting of the previous day as well. Now let's come back to this trade as well. Now what is happening over here and how we can trade in the market, how you're going to take the advantage of the previous day high or low. Now let's say the present day is over here rather than over there. The present day is over here, and you need to do what? You need to mark the intraday low and the intraday high of the previous day. So this is your previous day low of the market, and this is your previous day high of the market. So this is your previous day high, and this is your previous day low in the market. Now, as I told you, this strategy works up 70% of the times, 80% of the times, and that's what we are backtesting, and take the action accordingly. Now, in this day, what did happen in the market? The price took out the previous day high, and there are many buyers who are putting the stop losses on the previous support over here. So what they're doing is they're putting the stop losses on the previous day low. Those who ignorant buyers who do not know that this is the point of a liquidity and not the point of interest or a point of area where you should enter into the market. So what's happening over here is that the buyers, ignorant buyers, are taking it above their positions with the stop losses on the previous low in the market. Now, what's happening over here? We need to start taking out of the bearish price action, or you need to start seeing where is the major support or where is the last support which is being broken in the market. So once the price pushed up towards above this level, the price tried to retrace back and then started moving above, and then another support has been created like this. And as soon as the support has been broken down, we can take a sell entry like this. Okay, we can take a sell entry like this, putting the stop losses on the previous resistance in the market and trying to take at least 1:3 target. Now over here, you will see the price has not given proper 1:3, but however, the price has actually taken out the previous liquidity. So this is another important level that you can either target to this level as well, or if you should wait for proper 1:3 target. Now, as I told you, sometimes the target might not hit, but at least we are in the right direction of the market at every time that we are trying to trade. Okay, so this is the risk reward of 1:3 where we are not getting a green day. So I'm going to mark it as a red button because the strategy does not work on this day and the strategy worked on this day. So we are going to mark it as a green button. Okay, so this will be green. And now we are going to backtest like this for the previous 7 to 10 days, and then we are going to understand how we can trade accordingly. Now the present day comes over here. The next present day is over here. Okay, so now if you're targeting or you are trading over here, where is the previous day low and the previous day high? This is the previous day high in the market, and your previous day low is this one. Okay, so as you can see, the present day is over here, and this is the previous day where I'm marking the highest point and the lowest point. Now, what did you see over here? The price first triggered the previous day low of the market. This is your previous day low, right? Now, in the next session or the next day, what did happen? The price has taken out the previous day low in the market by taking out a good support. Now, as I told you, where should you buying in the market? Over here, we need to see where is the bullish price action over here. As you can see that the price tried to move towards the downside, sweep the major level, tried to move upside, created a good resistance at this level, and then finally broke it. Okay, so what we are going to do, we are going to put up a buy signature over here, putting up a stop losses at the latest support in the market and taking 1:3 target in the market. Okay, now in this day as well, the setup works out. This gives you more than 1:3 as well as sometimes, and sometimes it gives you less than 1:3 and gives you a small stop loss or a break even in the market. Okay, so over here as well, can I put it as green? Yes, because the strategy worked out at here as well. Now, if you will little bit observe in the market, the price after taking out the previous day high in the market has also given a reversal signature as well. If you will start looking at this point, after taking out the previous day high, the price tried to reverse only. So another time or another day, sometimes we take two entries rather than just one. In a single day, we get two entries rather than just one. Okay, now let's focus on another day. Let's say this is our present day in the market, and the previous one, the previous day high is over here and the previous day low is over here. Now I'm a little bit doing it at a fast pace so that we can do it a lot of back tests in the market and we can try to trade accordingly. Okay, now over here, what did happen in the market? So this is your previous day low, okay, and this is your previous day high. Now what did happen over here in the market is that the price in the whole day, okay, in the whole day when you're trading in the Asian, London or New York, the price didn't take out any other sessions. Rather, the price actually you can say range bound in the market. The price didn't try to break out the previous day high, and the price didn't even take out the previous day low. Even from this point, if you look at the latest candle, the price didn't take it out, rather take a previous day support in the market. Okay, it took out the major support from the previous day low. So on these types of days, you are not going to have any single day, or you're not going to have any single trade in the market. Okay, guys. So now another day. So this is break even, as we didn't get any trade in the market. Now let's get to this day where we are taking this as a present day, and we are going to mark the previous day high and the previous day low of the market. So this is your previous day high and this is the previous day low. So this is your previous day high and the present day. You can see that the price in the London session has taken out the previous day high. This was a GBP news, I believe, on 11:30 exactly. The GBP news came in and there was a huge momentum towards upside. Now, after taking out the previous day high, what did I tell you? You need to start focusing on where is the bearish price action, where is the latest support that has been broken in the market. So after taking out the previous day high, the price continued its bullish momentum towards the upside and finally broke a support towards over here. Okay, finally broke a support over here, or you can take the entry over here as well. So even in both the cases, you are taking an entry as soon as possible. So if you are taking the entry over here, you need to put the stop loss on the previous resistance only, and you need to target 1:3 target only. Okay, so again at this level, as you will see, that as soon as the previous support breakout in the market with the previous resistance as the stop loss, we are making another 1:3 target in the market with I think more than 390 pips over here, and with the stop loss of you can say 128 pips over here. So 128 pips stop loss and 390 pips target in the market. Okay, and the whole day the target took around I think 12 to 6 hours. Okay, if you will look over here, actually the price took around, the trade started at 12:35 and it ended at 5:05. That means took more than 5 hours to actually take your target. So whole day the market actually gave you your target only, and you need not to take any other trade in the market. So can I mark it as a green as well? Yes. So after one break even in the previous day, so this was a break even. There are singularly, if you will see how many greens are there and how many reds are there, there are 3 greens in the market and with 1 red and with 1 break even in the market, or you can say no trade in the market. Okay, now we'll continue the previous day. Let's say now this is your present day in the market. So this is your present day, and we will mark the present day high, the previous day high, and the previous day low over here. Okay, so previous day low will be exactly over here, something like this. Now on this day, what we can see that the price has taken out the previous day low in the market. As you can see, sorry, the price has taken out the previous day high in the market. As you can see properly, the previous day high has been taken out in the market. Now, after this, we need to start understanding where is the bearish price action or where is the latest support that has been broken in the market after the previous taking out the previous day high. This is the very good support where the price took out another support in the market and then started moving downside, giving us a signal of the bearish price action. So you need to take straight from here, putting your stop loss over here. This is a, I think 50 pip stop loss over here, and you need to take 1:3 as your target. Now, another time you will see only 1:3 targets are getting fulfilled, and even more than 1:3 targets are getting fulfilled in the market. And that's why I, range this strategy, or you can say range this target as 1:3 only. Okay, so this is another green day in the market where we have made a, you can say target in the market. Now, let's say this is the present day over here, and we are marking the previous day high over here, and previous day low is on the low side. Okay, this is your previous day low, and this is your present day of the trading in the market. As you can see, once the price took out the previous day high, let's see exactly where is the previous day high has been taken. So previous day high has been taken over here by this candle. Now, after this, we need to understand where is the support or where is the resistance or latest support that has been taken out of the market. So this was the major support in the market, which pushed the market towards the upside, and then there is a V shape in the market towards the downside. Now there is a one calculation over here. As you can see, after taking out this, the price is taken out the breakout support over here. So we can take an entry on the breakout of the support, and you need to put the stop loss over here, and you need to target 1:3 towards the downside. But over here, a twist is there because price gave us the entry after a lot of retracement. So in this case, you need to take 1:1.5 or 1:2 only. You cannot take 1:3 because the entry was given us too late. No doubt our structure work, and if you will look, this actually the target of 1:2 is targeted over here. However, if we would have got the entry somewhere over here or over here, we would have fully got 1:3. Okay, so sometimes you need to use your judgment as well. You just need not to copy the whole trade, or you need not to copy the whole strategy as it is. You need to understand the market and you need to trade accordingly. Okay, in this trade as well, we are getting 1:2 properly like this. So this is also a green day with your judgment possible, and with the same concepts, nothing else. We are just using a simple previous day high and previous day low strategy. So in the last consecutive 8 days, how many greens are there and only one single red has been there? As you can see, this strategy works more than 80% in the market, and that's why I was eager to share this thing with you. Many people try to look out for some simpler things, not for complex things. No doubt there are so many things that we can learn through proper mentorship and everything, which is properly available at our platform as well. But when you're looking for something easy and money giving, this is one of the things that I use in the daily markets properly. Okay, guys, so if you have any questions regarding this strategy, you can contact us on our WhatsApp number +919999494844. Or if you have any other series of things that you want to ask, you can put it in the comment box as well. I hope you like this strategy, and I hope you will want to understand and you will want to use this strategy more. So if you want to do proper forex trading and with the zero pip account, I have given a link in the description. You can open a forex account via that link, and you will be added into a premium Telegram link as well, so that you can get the proper community updates and you can get the proper updates on a regular time basis. Okay, guys, till then, take care, and I hope that we will be seeing you much more in the coming videos as well. Till then, take care. Hasta la vista.